Thank you for taking out this time and joining the call. I understand it's the craziest time of this result season. Thank you and thanks to the management also. We have with us, Alok Patel, Jayendrabhai Patel, and Amit from Arman Financial. Without wasting any further time, I will hand it over to Jayendrabhai, who will take us through the business highlights. Then we'll go over to Alok, who will throw some opening remarks on the new businesses, and then we can have it open for Q&A. So over to Jayendrabhai.
Thanks, Digant. Ladies and gentlemen, good morning, and hello to everyone. Thank you for joining us for the year-end con call for the fiscal 2018. The previous year has been quite a year in many aspects. I'm glad it's over, but it's hard to complain when we have achieved so much growth. The first half of the year was frustrating in many aspects because of demonetization. Recovery rate was at all-time low, growth was low, and operating costs were very high. However, we are happy to announce that we have not only recovered, but doing better than ever. Our assets under management, that is AUM, grew from about 190 crores to almost 425 crores. I repeat, from 190 crores to 425 crores AUM. That is about 120% growth year over year. We would like to stress that this growth is not a departure from our usual conservative nature, which we have been preaching for decades. All of our conservative policies remain intact. Low including ticket size, rural lending, static centers, commitment to product and geographical diversification, etc. We had spent the better part of the year to develop our infrastructure and branch network to be in a position to expand rapidly. Additionally, post-demonetization, there was a competition vacuum in certain areas which we were well positioned to capture and take the advantage of the situation. Another very existing news that I have to share is that we have very recently received an equity infusion from SAF Partners. I guess SAF doesn't need an introduction, but for the sake of introducing, SAF is one of the most reputed private equity investment managers in India. They have invested 50 crores in the form of CCD, which, along with accrued interest, will convert into ordinary equity shares after 18 months for a net investment of about 57 crores after 18 months. The fresh Tier 1 capital will be used to decrease risk and increase our RBI mandated CAR ratio, which will allow us to leverage more and increase our loan book. For those callers who have been following Arman for a long time, you would have been aware that we had been searching for the right partner for the last couple of quarters. Besides equity, SAF has a good and rather a great track record with helping small ideas become giant companies, and we can certainly use their help to grow in the safest and the most sustainable possible. We could not be happier with our new partnership, and we hope to have a long, fruitful relationship with them. I also take for granted that as we go along with the question and answer session, if anybody has any questions regarding SAF Partners, we will be happy to elaborate any news that we might have or any information that we might have. Going further, comparing the fourth quarter versus the same quarter the previous year, that is Q over Q results. The income from operations increased 110% from 12 crores to 26 crores. About two-thirds of that income was from microfinance book, while 20% was from two-wheeler operations and the balance from the new MSME segment. We achieved a record disbursement during the last quarter with a consolidated disbursement of 156 crores. Just for the sake of comparison, that one quarter's disbursement is the equivalent of almost two-thirds of the disbursement we achieved all of last fiscal. So it is for you to compare that last quarter was a very productive quarter. As you may be aware, in the fourth quarter of the previous year, we had declared a loss of 74 lakhs. We have recovered well with a 2.43 crore profit. You should expect the profitability to continue to increase in the future. Talking about the year-end numbers, as I mentioned previously, consolidated AUM increased from 191.64 crores to 423.34 crores. Again, I'll repeat that. The consolidated AUM from 191 crores to 423 crores, which is a 121% growth on a year-on-year basis. About two-thirds of the AUM is in the microfinance portfolio, 21% in two-wheeler, and the balance 12% in the new MSME book. Consolidated income from operations increased about 50% for the previous year from 54 crores to 80 crores. Consolidated income from operations from 54 crores to 80 crores. Despite the heavy burden of demonetization on the profit for the first two quarters, we surpassed our targets and expectations. And declared a PAT of 7.3 crores compared to 6.3 crores the previous year, a 16% increase. Disbursement totaled 530 crores, a 115% increase from the previous year. Disbursement breakup is as follows. Disbursement happened in the following fashion. Microfinance was 400 crores, two-wheeler was for 84 crores, and MSME touched almost about 46 crores. In the following year, we again have a lofty goals. The exact details I cannot share, but we plan to cross at least disbursement of 850 crores. We are planning to have a disbursement of 850 crores next year, 850 crores in disbursement, 650 crores in AUM. We plan to slowly foray into Rajasthan for our microfinance operations and perhaps one other state as well. In the MSME segment, we plan to expand the division and start a LAP product. LAP meaning thereof, loan against property. As always, ladies and gentlemen, I am thankful to the whole Arman team which worked extremely hard this past year towards recovery and growth and made such a difference to the lives of our customers. So far, fiscal 18-19 looks bright, and we hope for a great year going forward. Thank you all for your time and your support. Thank you again, and I would like to open the call for questions that you might have. Thank you very much, Digant.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Jatin K. from GS Investments. Please go ahead.
Hello, sir. Congrats on a good set of numbers. Sir, as you were talking in the initial remarks that our conservatism has remained, but we have still grown quite well. So I just wanted to understand what has the changes in the ground are we seeing, or what is causing such high growth despite we are saying that we are maintaining our conservatism?
Well, the story really goes back, Jatin, pre-demonetization. Actually, I cannot take the full credit for it because we are setting up an infrastructure as early as mid-2016 for the disbursement, putting the staff in. We expanded into Maharashtra and UP. We were expanding our MP branch network and everything. But everything got paused because of demonetization for about 4 or 5 months. And then because of that, our portfolio declined almost from about one-third. So after that, we were sort of well-positioned to expand. So I cannot take the full credit for it, about the 123% growth. But overall, if you combine both years, you can say we grew about 40-50%, which is on a compounded basis, which is what we normally do since the last 7-8 years.
Okay, sir. And I was looking at the press release posted on the exchange. So our NPA, gross NPA has grown a little bit, but we haven't increased any provisions, and we have everything almost as net NPA. So why are we not taking any provisions?
Are you talking about the microfinance book, the number of
Yes,
book?
sir. Microfinance also, and two-wheeler also, we have taken some provisions, but as in provision coverage ratio is not very high in that segment also.
So I think as far as provisioning goes, we follow whatever guidelines are given to us by RBI. So that said, in the microfinance book, we have to take the higher of 1% of standard assets or 50% of 90 days overdue and 100% of 180 days overdue. So whichever of those is higher. So in our case, the standard asset provisioning is enough. So we don't take any additional provisioning than that. So I think we have almost 2.26 crore consolidated standard asset, if I'm not mistaken. Yeah. And as far as the Arman book is concerned, those are all assets over 90 days. So as you know, we had to shift from about 180 days and slowly have brought it down to 90 days. That is basically the increase which you are seeing in the gross NPA. But overall, there is not much of a deterioration in quality in the two-wheeler side. And we are also very aggressive with our write-offs. So as you can see, our write-offs are much higher than our provisioning, and that has historically been the case for us. If we feel that the asset is irrecoverable, we write it off, and we rather take the tax benefit from that than to keep it on the books. In addition to that, we do a pretty good job with recovery. In the micro side, we have a whole another team now, which is something that most MFIs don't do. We have a whole recovery team which actually does only recovery. We are still chasing after the demonetization assets, the bad debts and the overdues. Recovery-wise, we are recovering still about 20 lakhs to 25 lakhs on a month-to-month basis. Of course, it slows down as time goes forward. Just maybe 3-4 months ago, we were
but our efforts are very serious in that direction because we feel कि पैसा लिया है तो पैसा देना पड़ेगा. Whether भले ही 2 साल हो गया या 1.5 साल हो गया, फिर भी we teach our clients कि no, money has to come back. And that is the reason why we have a strictly recovery staff especially in those branches where we have a little more serious problems. because of demonetization, especially in all the MFIs. They have been hit very badly in the milk belt areas, which is Aravalli branches, like in Gujarat, they call it milk belt, which is like Himmatnagar, Modasas, and those areas.
Right.
Okay. So,
yeah, we are also recovering on write-off accounts as well. So
that's great to know, sir. So the demon is around 1.5 years past. So we are still recovering that money. Is it coming back?
Absolutely, sir.
About 20 lakhs a month. Last month it was 20 lakhs.
No, I mean, average, you can average at this juncture since last 2-3 months, we are about 30, 40 lakhs.
Right.
A month.
Okay, that's great to know, sir. And sir, on loan book, you are saying next year would be 650 crore AUM.
Yes.
So would you be able to provide the breakup between MFI and two-wheeler and MSME?
Yeah, so we are planning, so I can give you a range. So what we provided was slightly a conservative number. So the range in microfinance will be about 400 to 450 crores.
That would be on AUM.
That will be AUM. Book, just simply on the current MSME as it lies will be about 100 crores. And if we manage successfully launching the LAP product, you can add another 25 to 30 crores to that. Hypothetically, that is, but it is still in the works. And in the two-wheeler book, we are planning somewhere between 90 to 100 crores.
Okay, great to know, sir. Thank you.
Thank you. The next question is from the line of Parag Jariwala from White Oak Capital. Please go ahead.
Thank you. If you look at last quarter, we added around 60 odd crores of AUM. And when you talk about 650 crores, it's like 60 crore a quarter. I understand that last quarter generally, fourth quarter is generally higher than the rest of the quarter. But, your 650 guidance actually doesn't add anything meaningful, especially when you're talking about lab.
But when you're talking, sorry, say that, continue.
No, what I'm saying is last quarter we have added 60 crores in the overall AUM, if my arithmetic is right.
Yes, you are correct, yes, correct.
And when I'm going from 420 to 650, I'm only adding 60 crores a quarter.
I understand. So I guess what you are trying to say is that what's the big deal?
No, I'm not saying that the big deal.
I'm saying is
we are not actually growing when we are talking about lab and everything. I mean, I'm just curious.
So the lab product is something that is just envisioning right now. If we launch that, certainly the numbers will increase. So what we have provided is sort of a conservative number to you at this moment. It could be more, certainly not less, all right? The thing which you are getting at is you are saying that if you have done 60 crores in the last quarter, then why have I set my target so low? Is that what you are trying to get at?
Yeah, that's the question.
See, last year was sort of a super normal year for us. And we were sort of catching up from the demonetization effect. As I mentioned to you earlier, our comfort level lies somewhere around a 50%, maybe at the most 60% year-on-year growth. That is what we feel is safe for us to do. Now, anything more than that, of course, in the finance business, I can open 100 branches tomorrow and I can cross 1,000 crores in 6-8 months. Money is not the problem. It's a recovery that we find is the biggest thing. We have a pretty strong risk framework, and we don't really like to grow very quickly. I think if you've been following it, I know that goes against whatever I'm saying is contradicting what we did last year. But as I said, last year was a little bit of an exceptional year. This is what we are comfortable doing, and growing faster, growing at 100% every year is fraught with risk. That's the companies you hear about in the news, but the ones you never hear about are the ones that go under. with such policies. So I don't know what else to tell you.
No. That's a very fair explanation. Lastly, can you just throw some light on UP market, especially on the microfinance side? I mean, it's a difficult market now. Almost our branches are equivalent to what we have in our home state. And couple of players are also very aggressive on those sides. So, what is the outlook?
The players were aggressive quite a bit, but it seems that people have taken a little bit of a break from UP after what happened in demonetization. Our portfolio, I shouldn't say surprisingly, but yeah, sure, for lack of a better word, surprisingly has been performing well in UP. Even as things like attendance and things like that are quite nice in UP, we are not facing much of an issue at all. And we are trying to keep everything very diversified. So if you look at our spread in UP, we've cast a very wide net. Normally, on average, we would have 50-60 kilometers between each branch. In UP, that average will be like 120 or even 150 kilometers. So we are trying to stay away from all of these political risk and stuff. Other measures we have taken is we have kept the loan sizes quite small. So the average loan size is only about 18,000 in UP. Other measures is that we are only, 100% of our disbursements are cashless. So that, as far as law and order and everything is concerned, so whatever measures we can take to reduce risk, we are taking them. But I think the reason we are doing well is exactly the reason we are doing well in UP is because, there is a little bit of a stereotype with UP that it's a bad area to operate, and that's not been my experience. I think if you have the right team and if you approach UP in the right way, it's a fantastic place to do business, especially in microfinance, because there is just a lot of poverty. Our target customers are very...
we are performing better in UP than in Gujarat itself.
Our home we are doing better. So, this is, I can tell you the PAR figures. 21 lakhs in UP.
Sorry, come again? 21 lakhs.
PAR 90 is 27 lakhs.
Okay.
So, and the portfolio is approximately 25% of it. About 90 crores. Yeah.
Thank you. This is really helpful. Thank you.
Thank you. The next question is from the line of Srinath V from Bellwether Capital. Please go ahead.
Good morning, guys. Just wanted a few maintenance questions. Could you give a split of the 5.1 crore other expense for the quarter?
5.1 crore split of the other expenses.
Yes.
Yeah, sure. I can work that out.
Just to get an understanding of the write-off and provision versus the business expenses.
Yeah, so let me just... Sorry, just give me a second. Huh?
No problem.
Okay. Yeah, 1.5 about sales and incentives. So we up, the lot of the bonuses that go towards the Srinath, right. A lot of the sales incentive bonuses to the dealers goes towards the year end. So that was about 65 lakhs.
Okay.
We also a lot of legal fees associated with the with the SAF deal. So there was legal and professional fees, somewhere around 60 lakhs, 64 lakhs total. About 50 was associated with the SAF deal. So we had a lot of the traveling expenses, those increased a little bit. About 63 lakhs of that was in the traveling side. Let's see what else.
Provisions and write-offs would be?
Yeah, so that's actually the major one. So we had about 60 lakhs in Namra and 27 lakhs of write-offs in Arman.
Okay.
So that's about 87 lakhs. And about 76 lakhs we had a provision on standard, 81 lakhs was an increase in the provision for standard assets.
Okay.
Which just basically increased because of the asset size increase.
Okay, fantastic. Could you kind of share the PAR 60 for the MFI book and also post-demon, what would be the collection efficiency? The loans that were dispersed post-demon.
So the collection efficiency for microfinance of loans post-demonetization is about 99.42%.
Okay.
So that was hovering around 99.7. We have seen a slight reduction in the repayment rate, but I think that's more of a seasonal thing than anything else.
Okay.
So I think a few basis.
PAR 60 would be not too relevant now, given that everything has flown into NPA.
About 4.5 crores is PAR. Yeah.
Okay.
PAR not mistaken.
Okay. I just wanted to understand after all this...
1.43%. That's what it is. 1.43%.
Got it. So I just wanted to understand after the normalization sometime later next year or the year after, how would you see operating cost to total assets for the MFI and MSME business? How would this kind of settle? And then second question on that is the MSME piece. If we were to get in LAP, how would that affect our kind of cost to total assets as you see it?
So we'll start with the micro side. Our model is a little bit different than others because we are still concentrating on a bi-weekly collection and a low ticket size. So that being said, I don't think that we can match some of the other MFIs who are using monthly products and high ticket size sort of urban places. But I would hope I can get the operating cost down to around 8%. So that's what our 7.5% to 8% is probably our goal in the next year. Our tenure we are going to increase from an average of 14 months to about 18 months. That's just because we have to increase the loan sizes and we want to keep the installment sizes low overall for the customer. And for the LAP side, I mean, it's, I haven't worked out all the nuances right now on the LAP side. Overall, the operating cost for the MSME is quite high at the moment. It's about 10 to 11%. But I think as the portfolio increases, that should come down. But overall, it's expensive to run MSME, and that's why the pricing is also a little bit on the higher end as well. So,
give me a slightly more granular view, as in yields would be about 30%, then credit cost OPEX. Can you just break that for the MSME piece?
For the MSME piece, we are charging somewhere around 30% to the customer, out of which about the interest cost will be about 12%.
Okay.
Last year, OPEX was about 12%, so that's 24, and we were expecting a sort of a loan loss of about 3%.
Okay.
So we had priced it to make about a 3% margin, but luckily the loan loss wasn't as much as we expected. But let's see, one cycle hasn't been over yet.
Okay. And how would LAP kind of, again, not to get into specific numbers because we may not have worked it out, but how do you think LAP will sit on top of this to get cost to what kind of range, OPEX cost?
Operating cost, I can hope as the branch sizes grow, I can get it down to about, at this point, about 9% or so is my target. Just you have to understand that the model is based on cash collections. So in micro, when I'm going to collect money from a center, which might have 6, 8, 12, 20 people in that center. Here I have to go and individually collect from each member, right? So that is a bit of a free affair. But that's because, I can pass it on to the customers, and B, the discipline remains from the customer side. But I can reasonably pass it on, and when I bring in this LAP, I can get a little bit more efficiency out of my staff also, because they'll be selling both the personal, the unsecured and the secured in the LAP. But LAP, I cannot hope to get even close to the amount of margin which I'm getting from the unsecured portion. So that will price significantly lower.
So basically, LAP will help us cover for fixed cost, and the margins will basically come from the low-ticket MSMEs.
Yes, correct.
Got it. And what is the customer profile and ticket size you're looking at from the LAP business?
Ticket size, we are looking at 2 to 5 lakhs right now. And these will be basically, so we are not covering agriculture properties, neither are we covering the registered mortgage deeds in the in the city municipalities. We are trying to cover those middle properties, what they call the Gamtal properties in Gujarat, or, the Panchayat properties. So that would be, that's what we are trying to cover at this point.
And customer profile would be?
So these would be slightly one step above the MSME customers, or customers who are even our MSME customers at the moment. Mostly concentrating on the rural side, people with well-established businesses who are just unbanked at the moment. They run a sort of a cash business, but the cash flow support has to be there.
Okay. Thank you. I'll come back to the queue for further questions.
Long-time business owners, pretty much.
Got it. Thanks.
Thank you. The next question is from the line of Pranay Korean from Ambit Investments. Please go ahead.
Yeah, thanks for taking my question. I just wanted to, there was a note at the bottom of the results saying that there's an additional RBI provision. Could you just explain that for us?
There was a note where?
Standard asset.
Oh yeah, that's just the standard asset. That's a law. That's an RBI mandated provisioning which you have to make on standard assets. And I think it's 1% for microfinance, and it's 0.40% for our asset finance and MSME. So on Arman, it's 0.4%, and in Namra, which is the NBFC MFI, it's 1%.
Okay. So the word additional was used. So there's no other. Is there any other provisioning that was embedded in the numbers?
No, not over and above what is required.
Nobody likes to do
Okay. And if you could just give the split for the year between write-offs and provisioning.
Oh, write-offs and provisioning. Yeah, in the console level, right?
Yeah.
Yeah, I can pull that up for you. 1 second. Bad debts written off is 5.23 crores.
Okay.
Contingent provisioning on standard asset is 2.26 crores.
2.26.
Yeah, okay. And the balance is the provisioning for NPAs.
Okay. No, so that provisioning for
So overall, combining all the provisioning and the bad debts, it comes out to be, I think, 7.6 or 7.65 crores. Yeah.
Okay, fine. And so I think on the earlier question you had answered this, but you had given a breakup, I think, of 60 lakhs, 27 and 81 lakhs was the total credit cost for the quarter, right? Something like 1.7 crores.
So I told you these figures for the year.
Yeah. And I think earlier on the call...
year. For the fourth quarter, just the write-offs, Namra was about 60 lakhs and Arman was about 27 lakhs.
Okay, fine. And provisioning, standard provisioning was 81 lakhs.
Yeah. 81, is that right? Yeah, 81.
Okay, fine. And any reason for a slight uptick in NPAs for the two-wheeler business?
It's because we had to switch from a 120-day recognition to a 90-day recognition in the last quarter.
So that impact came only in Q4?
Yes.
Okay, fine. And do you have the amount of recoveries for FY18?
Amount of recoveries for FY18?
Yeah.
I'm sure I have it somewhere. I don't have it on memory. Let me see if I can find it.
Even a ballpark number would be fine.
Ballpark. Are you talking about bad debts recovery or are you talking about bad debts recovery?
Yeah.
I can pull that for you somewhere. Number it was 82. For number it was 82 lakhs.
Okay.
And 1 second, give me a second on the Arman side. 6.95 lakhs.
Okay, fine. And was this number very different from FY17 or?
Wrong number. I just looked at the wrong number. It was 33 lakhs for Arman. 33 lakhs for Arman.
33 lakhs and 82 lakhs for Namra.
Namra, yes.
And were these numbers significantly different from FY17?
Yeah, so it was just 7 lakhs.
I mean, did you see a big jump? Okay.
Because, I mean, let's be honest, we had a lot more written off last year than we did, this year than we did last year. So obviously that will be a jump. But as I keep saying, last year was really not comparable to most other years because of demonetization impact.
Okay. And I think you had said, given the PAR 60 and 90, so I think yours was 1.4% for PAR 60? Just confirming.
In micro, it's 1.45%, I believe.
And PAR 90?
PAR 90. Vivek, can you look that up very quickly? Close to 1%. No, PAR 90 will be about 1.2%. 1.12.
Okay, fine. All right, thanks so much.
Sure.
Thank you. In order to ensure that the management is able to address questions from all the participants in the queue, we request you to please limit your questions up to 2. Should you have a follow-up question, we request you to rejoin the queue. We move to the next question from the line of August Dave from CEO Capital. Please go ahead.
Thank you very much for the opportunity, sir. Sir, you reached just enough, I think 2 or 3 questions back you mentioned, and you gave the breakup for MSME in terms of how much is the yield, how much is the interest cost, what's the OPEX. Can you also give similar breakup for your two-wheeler business and MFI business?
Yeah, so MFI right now, the margin is about between 24 and 24.5%, plus we charge another 1.
Sorry.
As what other breakup? So you want the yields for two-wheeler, it's about 21%. That's all in.
And sir, I guess the interest cost will be the same. OPEX will be different, right? And loan losses will be...
OPEX is different. So in microfinance, we currently have an OPEX of almost about 8.5%.
Okay.
And in the two-wheeler side, I believe it is close to about 6%? 6%, between 6 and 6.5%.
Okay, and the loan losses that you priced in?
So loan losses historically in micro, so last year was a little different. Before last year, we used to have a loan loss of about 75 basis points to 60 to 75 basis points for microfinance and about 150 to 200 basis points for two-wheeler.
Okay. Sir, then the next question, if I look at the other expenses for the year and compare it to the previous year was 10.72 crores, whereas the breakup that I have is bad debt written off for 3.2 crores, 5 crores for provision for NPA, contingent against standard assets for 17 lakhs. Can you give these breakup for this 17.23 crores this year?
The breakup for other expenses for 17.23 crores?
Yes, for this entire year.
The large chunk, about 7.6 crores, will be related to the bad debts and the provisionings.
Okay, that's the total number, 760. Okay.
Yeah, so you are left with a balance 10 crores, and that's basically all kinds of expenses. Legal and professional was about 2.15 crores.
That's okay.
Was about 1 point. Sorry?
And I'll take from the schedules when the balance sheet comes.
Yeah.
Final question from my side. Historically, when I look at your loan losses, they were never really 1% until something extraordinary happened.
Right.
So last 2 years have been aberrations. So going forward with the change in everything, you in MSME you are pricing in 3% loan losses. So are we going to see 3% loan losses, or are we going to stick to around 1%? What's your sense? Because you really have a good. It is very surprising that you're getting recoveries so after such a long time after demonetization problems. Right? Not many people have done that. So I'm just wondering, if I take a 5-year view on the company, what kind of loan losses through the cycle will we see? What's your sense?
That's an excellent question, actually. What can we expect as far as loan losses going forward? I think that's the summary. In the microfinance side, I think the industry has changed enough where you cannot expect 50 basis points loan loss anymore. That is my assessment. It's anybody's guess where they'll wind up with, but my guess is on a year-to-year basis, you have to at least expect 1% going forward, at least in the long run. And in the two-wheeler side, again, the industry has changed to a certain extent, a lot of competition. Down payments are going a little lower, so that increases overall risk. And if you have to repossess, that increases your overall losses. So I'm putting that at about 2% in the long run. And in the MSME side, I did account for 3%, but I think I was being a little too pessimistic. I can safely put that down to about 2% now.
Okay.
But let one cycle go before hold me to it. So it's a 2-year cycle. We haven't been done with the entire cycle yet. This is the same. So, just by experience, when we started microfinance in 2010, we faced the same situation. There were no bad debts at all for a year. Because originally, when you first start, you are very, very conservative and you try to cherry pick and go after the lowest hanging fruits. Once your operations get going for a good year, 2 years, your volumes start increasing, then things go a little topsy-turvy. So, let's see how it works out to be.
So if I can squeeze in one more question, the OPEX numbers that you have given, how does operating, so you're a small company as of now, you are growing very fast, 50-60% is what you have said. So how does operating leverage play out at the branch level? How long does it take for a new branch to break even in a new state? And what kind of business do you need to do in a particular branch for the break even to happen? And how do we see these OPEX numbers? And what's a realistic trajectory for these to come down with the increase in price? That's it, sir. Thank you very much.
So, I have always said that once we reach about 600 to 800 clients in microfinance, that's the point of break even for branch-related expenses. For MSME, it depends on it's a little early to tell the average, but right now it's about 450 customers is when I break even for the MSME side. And two-wheeler, it's kind of a different process altogether. So it's a dealer-based. And for me to run a successful, let's say a profitable dealership, I have to do at least about 8 to 10 cases in a month. So that rough estimates come out to be.
Thank you very much, sir. I'll go back in the queue. Thank you.
Most of the two-wheeler is a very variable cost. So besides just the base, it's what do you call it? Variable cost. So it just depends on how many cases you do.
Yeah. Thank you, sir. Thank you very much. I'll go back in the queue. Thank you.
Thank you. The next question is from the line of Rohan Mandora from Qtr4 Securities. Please go ahead.
Good morning, sir. Thanks for the opportunity. Sir, I would like to understand in the MFI space, with some of these new small finance banks coming into Gujarat and also banks like Bandhan entering into Gujarat, are we seeing any pricing pressure, and how do you see the opportunity there in MFI?
In the MFI side, there is not a lot of pricing pressure. In fact, I have noticed that the SFBs are running rates higher than me. They are running rates, some of them are running rates closer to 20. So, MFI is not a very price sensitive to begin with. Now, up to a certain level. So if somebody is charging 6-7% lower than me, a customer is going to manage comparing it. But it's more about timely delivery of funds that matter to the customer.
Okay. Okay, thanks. And sir, like on the NIM side, if I look at your bridge note, from 1Q FY18 till 4Q FY18, the NIMs have come down from around 17.3 to 13.2. So going ahead for FY19, sir, what is your expectation on the NIM?
So on the NIM side, as you leverage more, the NIMs go down. And at this point, we are almost completely leveraged, both in terms of Tier 1 and Tier 2. So that's what you are seeing there overall. Is basically, in the last quarter, unfortunately, I guess we had a lot of different bank disbursements that came in the last month. And there is a lot of front load costs that we have to pass right away, so we cannot accrue them across the life of the loan. So that's what caused the other borrowing cost caused the NIMs to go down slightly as well.
So what would be the impact of this that you indicated on the NIM, if you were to adjust for that?
If I were to adjust for the other borrowing costs, what would be the impact on NIM?
Yes.
I wouldn't know that calculation on top of my head, but I can certainly get back to you on that.
And so, like, incrementally, what is our cost of borrowing right now?
It depends on how badly you hit. So on the lower end, it's about 10, like the lowest cost we just borrowed from SBI in March at about 0.5%. On the higher end, that it's about 12.5%. So it just depends.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Manav Vijay from SL Mutual Fund. Please go ahead.
Yes, sir. Thank you for the opportunity. Just want to ask you that we ended the year with roughly 107 branches on the microfinance side. How many you intend to open in FY19?
About 40, 35 to 40.
And mostly they should come in UP and Maharashtra and Rajasthan?
No, so Rajasthan, we are basically opening it as a sub-operation section of MP. So we have about 4 to 5 branches that we are just planning to open in Rajasthan and then slowly expanding from there. That will be on the MP-Rajasthan border. On the UP side, we have a plan to open about 3 to 4 in northern UP and about 10 to 15 branches in eastern UP. So, and lens will be divided between MP and Maharashtra.
Okay. And sir, if I see that during this year, the total number of branches that you have in Madhya Pradesh remained almost stable around 24 to 25. While the number of branches in UP increased dramatically, almost by 1/3. So if you can provide some clarity as to why MP, I would say, is staying where it is staying?
Well, there was a lot of opportunity in UP to expand. I think that we had a pretty good team, and there was a lot of vacuum that was created by a lot of the larger MFI players after demonetization. So we just thought it would be kind of easier to go after low-hanging fruits. So MP is more concentrated at the moment than UP as far as other MFIs go. And Maharashtra had a lot of its own issues post-demonetization, so we stayed a little bit conservative.
Okay. Sir, if you could also provide some details about, let's say, some plans of your Rajasthan as to, although you mentioned roughly 4 to 5 branches, but the expansion would be slow and steady like the way you did in UP, or it could be faster?
In Rajasthan, it will definitely be slower.
Compared to UP?
Yeah, compared to UP.
Okay, fair enough. So that is all from my side. Thank you very much, sir.
Great.
Thank you. The next question is from the line of Pranav Singh, an individual investor. Please go ahead.
Hello, sir. Congratulations for the large equity raised.
Thank you.
After the equity infusion, I was wondering if there are any chances of rating increase and maybe any decline in interest costs. Maybe you would like to diversify your funding sources.
Yeah, for sure. I think as the equity base increases, the lenders will get more comfortable, and that should translate into a decrease in the overall lending cost. We are also approaching the credit rating agency to see if we can get an upgrade based on the recent infusion as well. So that should result in a decrease in the interest cost slightly as well. So I think next year will be definitely, you'll see a decline in the overall cost of borrowing.
Okay. And so this time we have written off the leftover demonetization loans. I was wondering if there are any more loans still left that we may need to write off maybe next quarter.
In demonetization?
If any demonetization loans, old loans which are not repaying, if there's some of them left which we need to write off next quarter, I was wondering.
Very little. I mean, there are some stragglers left, but at this point, it's basically the ones that are paying back slowly rather than, giving like $100, $200 here and there. So those are still on the books. I think if I had to venture a guess, that would be somewhere around 70 to 80 lakhs of those loans which are still left on the books. But I don't expect too much of a write-off to come out of them. And if it does, even if 50% comes, it won't be a large chunk of overall book.
Yeah, that's great to hear. So can
Excuse me, this is the operator. Mr. Singh, may we request you to rejoin the queue for follow-up questions, please?
Sure, I'll do that.
Thank you. The next question is from the line of Srinath V. from Belvedere Capital. Please go ahead.
Yeah, hello. Can you just share the state-wise AUMs for the
state-wise AUMs?
Yeah, yes. So we've given, I think, Uttar Pradesh out already. If you could, so that we can have a view on this diversification move that you made.
Yeah, 1 second. I can pull that out for you.
Yes.
I have it in some presentation, I'm sure. I think roughly, if I had to tell you...
Yeah, just a rough percentage would do.
So, 38% is in Gujarat now.
Okay.
23% is in UP.
23.
Oh, sorry. Never mind. That's disbursement. 44% is in Gujarat.
Okay.
21% is in UP.
Okay.
13% is in Maharashtra.
Okay.
21% is in MP, Madhya Pradesh.
Okay.
And 2% is in Uttarakhand. But Uttarakhand, we consider it a part of our UP operation.
Okay.
We have 2 branches there. So, but yeah, 2%. So I guess UP operations will be 23 instead of 21.
Got it. Just wanted to find out what kind of ROAs are we targeting for the MFI business going forward. Do you have anything in mind? Also, because MSME is not settled, I'm not too sure if you'd have anything in mind, but if you could share your views on the potential ROAs for these businesses going forward.
So on a fully leveraged basis, I would say around 3% is my conservative estimate for the microfinance side. Next year, I'm estimating between 4-4.5% for the MSME book.
Okay.
And about 2.5%, give or take, for two-wheeler.
Okay, cool. Thank you.
Yeah, sure.
Thank you. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Thank you, sir, for the follow-up. Sir, your deal through which you have raised the equity, I was just wondering how will we see the consequences of that flowing into the P&L and balance sheet? So you said the accrued interest is 7 crores. The total deal is 50, but at the time of conversion, it becomes 57. So this 7 crores will flow into the P&L, or will it be provided directly in the balance sheet?
Sorry, that was my reminder. So how will it affect the balance sheet and P&L, the CCDs? Is that what you're saying?
Yes. Will you provide directly in the balance sheet?
Yeah. So it will. So not that I'm an accounting expert at this moment, but so it's a 50 crore CCDs, the interest at 10%. So if you count 18 months, that will be about 7.5 crores worth of interest, out of which about 7.5% of that 7.5 crores will go away in the form of taxes, TDS or whatever.
Okay.
There's another 3% that we have to pay that's tax related. So out of that 7.5 crores, about 10.5% will go away in tax liabilities, of which will convert into more shares at 3 is a share, and that will just lie as a payable in the balance sheet and a liability, and then once it converts at the end of 18 months, it will go into share capital and reserve and surpluses.
Perfect. Thank you very much, sir. Thank you.
Sure. So basically what will happen is it will bypass the P&L and go straight into the reserve and surplus, the interest portion.
Okay. I understood it slightly differently. I thought if it is payable, then it flows in through the P&L, goes to the balance sheet as payable, and then at the time of conversion, the payable is extinguished.
Right. So it's a non-cash item. It will pass through the P&L. Bypass was the wrong word. I'm sorry. It will pass through the P&L, sit on the balance sheet, and then go transfer share capital and
cash consequence is only the tax portion, which is minuscule, 10% of the interest. Everything else passes through the P&L, but remains on the balance sheet as payable, and then at the time of conversion is extinguished.
Right. Yes, that is
perfect, sir. Thank you very much, sir. Good luck, sir. Good luck. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to Mr. Bhavik Mehta of Antique Stock Broking for closing comments. Over to you, sir.
Thank you all for joining the conference, and thanks to the management to patiently give us all the answers to our queries. Thank you and have a good day.